What's up everyone, it's DaviFX here. I know I'm preaching always about simplicity in trading. So today I'm going to be talking about what is the simplest and easiest way to draw a Fibonacci for an extra confirmation in your trading. All right, welcome to the charts, and let's quickly and easily talk about how to draw a Fibonacci. So here you can see example of some crazy market conditions, right? And there's many ways, many right ways to draw a Fibonacci, but I'm going to explain how I use mine. I only use Fibonacci for extra confirmation. I don't use it for entries. I don't use it for my strategy, just for that extra confidence that I need in my setup, in my trading, and all of that. So basically, you have some crazy market conditions and you don't know where to draw a fib from. Should I draw it from here? Should I draw it from all the way high, from all the way low to all the way high, and so on and so on? What is the right and what is the easiest way to draw it? So I'm gonna quickly give you some nice tips, some examples in real markets, some examples here on the line so you can easily understand. First example, let me wind it back a little bit. There are three types of market conditions: uptrending market, right? There's a downtrending market, and there's a sideways moving market, otherwise said consolidation. So Fibonacci is best used at uptrending market, downtrending market, and you should not be using this at consolidating market, because on the trending markets it's mostly valuable and you can take the most advantage from it. So first example, I'm going to be talking about uptrending market. So how do I look, where do I look, and where do I draw my fib from? So as you can see, we have obviously an uptrending market. We have serious higher highs and higher lows, and then the market kind of stopped and slowed down a little bit, forming this resistance that we have here, right? So now your next step, after you identify the trend and identified the market structure, you wait for the market structure to break. So as soon as this happens and the price starts pulling back, this is where you can draw a fib. Now you might ask a question: so where do I draw my fib from? Very simple. From the point where the price came down before breaking this market structure. So in this example, price came down here before boom, shooting up and breaking market structure to the upside. So right now what I do is I draw my fib from swing low to swing high, and now I can mark up zones such as a zone between 0.5 and 0.6. Some may call it a golden zone, and that's what you do. You kind of wait for price to come down to that level, and it's most probable that it's going to bounce from this level if you have an uptrending market and you have a decent structure here on the left. Then this is not just going to be a Fibonacci retracement, it's also going to be trading with a trend, and you're also going to have a market structure that is supporting your evidence to go to the upside. Exactly the same thing with the downtrending market. Once you identify the trend, you see the market structure forming. What you do is you wait for the price to break that market structure and start pulling back. And now where do I draw my Fibonacci from? Is from swing high to swing low. And that swing high is where the price came up before breaking market structure to the downside. Okay? All right, here it is. So what is my first thing that I do before I look at any setups? I identify the trend. So here you might probably all see, obviously the trend is up. Here the trend is up also as the momentum. So we're only looking for longs. We're looking for the retracements to the downside, right? So what do we see here? We see that the price is moving up with some nice momentum, forming series of higher highs, higher lows, higher highs, higher lows, higher highs, and so on. So right now, what I see right away that I just talked to you guys about is a market structure, right? We have price respecting this market structure for not once, not two, but 3 times. So what do I wait for now? I wait for a market structure break. Price is at this level now. As you can see, it has been respecting even more, giving me extra confidence that if this is broken, there's a high chance that's gonna go up, right? So right now, right away, we have a market structure break. And where did the price come down before having this market structure break is this right here. So what we can do is we can pull out a fib. We just want to wait for some more momentum to the upside and start of the retracement before we can draw out a fib right away. As you can see, if I draw a fib from this low to this high, the price has really respected the 0.5 and 0.6 golden zone, right? Let me just keep going and show you some extra confirmations, extra examples. All right, right away, another market structure, right? I can delete this to make it cleaner. Break. Where did the price come down before breaking the market structure? This right here. So let's wait for the price to start pulling back. Here it is. Swing low, swing high. We can move this to make it a golden zone. Let's see how this respects it. Perfectly, right? So this is an example to go to the upside. Once again, identify the trend, identify the market structure, and find the point where the price came down before breaking that market structure. And this is where you draw your fib from. All right, this next example is going to be a move to the downside, right? So we can clearly see by zooming out that the price is moving down to the downside. We have some nice momentum candles as well. So if I zoom in right now, let's see what we get, right? This is 4-hour chart, 4-hour candles. The price is really moving down. Okay, now we see some market structure, right? So right away we have multiple rejections from that market structure. Here is the break. Let's wait for the price to start retracing. Here it is. It starts retracing. So where did the price come up before breaking the market structure? Right here, and this is how you draw a fib. This is where it came up before breaking the market structure. Swing high to swing low, and right away we can mark up the zone between 0.5 and 0.6. Let's see how well it respects it. Once again, this is not a strategy. This is just an extra confirmation, a great extra confirmation for your trading. So here it is, beautifully respected zone between 0.5 and 0.618, and a nice move to the downside. Once again, your biggest job is going to be not identifying the market structure or drawing a fib. Your biggest challenge is going to be to find out, am I in the consolidating market? Am I in the up moving market? Or am I in a down moving market? And your next mental challenge is going to be, if we are in the consolidating market, are you going to be strong enough mentally not to trade these conditions and wait for one of these to start? All right, that's it. If you like this video, please click the like button. And I promise this upcoming year, 2022, I'm going to be uploading more and more educational videos. My goal is educate as many people as possible and make your trading as simple as possible. It's DaviFX here. Peace.